Welcome back to the channel, traders. Today, we're diving deep into what I call the glitch, a refined version of our beloved moneymaker setup. This A++ strategy focuses on identifying high probability trades right from the origin of the move. Stick around because this video will level up your trading game. Before we get started, a quick reminder to join our Moneymaker Traders Discord server. It's a great place to connect with fellow traders, share insights, and get live updates on market movements. The link is in the description below. Introduction to the glitch. Let's start with the basics. The glitch is all about precision and timing. It's not just about following the trend, but catching the very origin of the move to maximize your gains and minimize the risk. This setup builds on our moneymaker strategy, ensuring we only engage in A++ opportunities. The glitch usually gives a high probable and very fast move, as you can see in this image. The origin of the move is where the real action starts. It's the point where market sentiment shifts and the significant price movement begins. Identifying this spot accurately is crucial for the glitch. Here in this example, we were making higher highs, but this origin broke the last protected low. So this origin was responsible of breaking that low. We don't take origins that didn't make a new low or a new high. We have all the A++ criteria on this origin. We have displacement, we have accumulation, and also a first tap here and here. This will create early sellers here. So when they liquidate them, we buy with smart money their stops and go for the one-to-one. Now, let's define what makes a setup A++. We have a checklist that helps us ensure we're only taking the best trades. Number 1. Clear trend structure. Like in this example, we can see that the trend is clearly bullish. You have to make sure we are not in a consolidation environment. Number 2. We leave the zone unmitigated with displacement. In this example, the origin of the move was never mitigated. Price left it with displacement, and we left the origin of the move unmitigated. Number 3. We accumulate above the zone and create stop losses before mitigating it. For example, here we create this low and went up and create all this fake structure just for price to come sweep all this liquidity, mitigate the origin, and resume in its bullish action. Number 4. The origin of the move takes the stops of a zone before or a small consolidation before. Here in this example you can see that this zone or this origin took out this zone's stops, and we also have this mini consolidation here. So how do we enter using the glitch? Number 1. We create the origin. Number 2. Price makes a higher high or a lower low with closure. But we have, for example, in this zone, price creates a higher high with closure, so we closed above the whole zone, not just the origin. Number 3, we have displacement above the origin. So we can see clearly that price displaced above the origin before it mitigates it. Number 4, we accumulate and never mitigate the origin. The price should create a lot of liquidity before mitigating it. Number 5, the entry. So after all of this happens, we just put our limits at the 50% and take the one-to-one. The one-to-one is usually given even if the market is seeking to flip. Like in this example, price flipped bearish, although it was a fake flip to mitigate this origin, but the one-to-one and the trade from the origin was given even if you were counter-trained. A little nugget for the guys that pay attention. The origin of the moves often gives more than one trade. Now, let's talk about incorporating the ZIL model. To further refine our entry and make our approach more mechanical, we can incorporate the ZIL model by Dave Teaches. This model involves using a Fibonacci retracement incurred in our moneymaker setup, focusing on the swing that comes back to the 50% level. This allows to achieve a better risk-reward ratios and ensures we enter trades at optimal points. So you can guys go check the video about the ZIL model and how we use it, but we put the zone entry at the 50% of the origin. We put the RR on the last impulse that got the price to that very 50% of the origin. We enter at the zone entry, we put our stop losses above the invalidation, and we target the take profits. As you can guys see here, we have a 3-hour trade minimum by design. Another important thing I need you guys to know is that this is for the advanced guys only, because if you are clearly counter trend, the glitch will only give the 1-to-1. So make sure you guys go break even when the 1-to-1 is given, because lots of times price will react from those last zones created and fly to take your stop loss. So by aligning our entries with the retracement levels, we can more confidently capture the beginning of strong moves while maintaining strict risk management. This added layer of precision given by Dave is what elevates our strategy to the A++ level. Let's move on to some trade examples I took. The executions are shared in my Twitch, so make sure you guys are following me there. Here's a recent trade I took using the glitch. Watch how I identify the origin of the move, apply the ZIL model for a precise entry, and manage the trade. Here we had this bearish zone. We closed under. So I identified the origin and waited patiently for price to come back to my 50%. When price made his move to the 50%, I identified the impulse and put the ZIL fib entry at the 50% of the origin. So I put my limit in the 50%, my stop above the invalidation, and only went for the 2-to-1 because I knew price usually reverses at 1:30. And usually after lunch they will seek the stop of the guys that made some money before in the AM session. So you can see how the origin gave the trade and how much 1-to-1 it gave, although price was seeking to flip. Example number 2. This is a trade I took on the 5-second chart yesterday. You can also see the execution for it on my Twitter. So I just localized a origin, which was also a zone. Sometimes the zone is made of one and very same origin. So this zone took the liquidity before, which made the A++ tank check, right? Number 2, we accumulated and first tapped the zone and left without mitigating it. Number 3, we had the displacement. So I just dragged my fibs, put my stop under the invalidation, and went for the full TP setup. It was a quick 4.83 hour trade. I risked something like $150 and made $675. So there you have it, traders. The glitch. This refined approach to our moneymaker setup, combined with the ZIL model, will help you identify high probability trades right from the origin of the move. Remember, trading is all about discipline and patience. Stick to your plan, follow the criteria, and watch your trading improve. Okay guys, thanks for watching. Don't forget to subscribe and join our community on the Discord. It's free and the link is in the description below. Until next time, trade smart and stay disciplined. Ciao ciao.